I actually said specifically today that a long, long time before we sold a share of Bank of America, we're very happy we got 700 million shares, and you know, I like the business, I like the valuation, and I like the management very much. So that I think you'll see that for a long time in our holdings.
Buffett has sold off most of Berkshire's other bank stocks, but for some reason, he's not only kept his existing shares in Bank of America, but he's also bought nearly 100 million shares in the past year. Berkshire Hathaway owns over 12% of Bank of America's shares outstanding. So, let's explore Bank of America and see why this bank is worthy of being Warren Buffett's second largest holding. Banks make money in a ton of different ways, but the main way is by making loans and other investments with money that customers deposit. Bank of America also makes money through fees charged to customers and investment banking activities like securities trading and underwriting for companies going public. Banks in the U.S. are in one of the most heavily regulated industries and are under the control of the Federal Reserve. See, banks can't just go out and loan all of the money a customer deposits. Instead, the Fed sets reserve requirements that determine how much the bank can actually loan. For instance, Bank of America's reserve requirement is about 10%, so they can loan up to 90% of the money from customer deposits. The Federal Reserve changes this requirement based on how the overall economy is doing, and will make the reserve requirements higher when too much money is being loaned, and lower requirements after an economic downturn to encourage lending. As you can see, banks are the definition of a cyclical industry, since they directly cause the economy's cyclicality. Bank of America's main business segments are consumer banking, global wealth and investment management, global banking and global markets, and the bank also has a miscellaneous segment called All Other. Consumer banking deals with mortgages, credit, personal, auto, and small business loans and products. GWIM deals with wealth management for high net worth individuals and retirement accounts. Global banking includes loans and advisory services for commercial industries and investments for customer deposits with the Federal Reserve and other low-risk comparable investments. The global markets segment is basically the investment banking part of Bank of America, where all the trading and securities market making takes place. The bank trades on behalf of clients and uses some of the bank's own deposit money to trade securities like public equities and fixed income. They also trade over-the-counter derivatives like swaps and forward contracts to increase profits and hedge their exposure to loans and investments they already have. In case you were wondering, yeah, these are the same ones that Michael Burry used to short the financial crisis in 2008. Though, don't worry too much about another financial meltdown like 2008. Since then, banks have been subject to extremely strict regulation by the Federal Reserve and cannot use much of their own money to bet on risky trades like before the financial crisis. You can rest assured knowing the Federal Reserve and the U.S. government are literally breathing down Bank of America's neck with absolutely everything they do. The All Other section includes investments to hedge risks, adjustments for when investments lose value, expenses for litigations, and investments in environmental, social, and governance policies. Bank of America's financial numbers were unsurprisingly down last year due to the effects of the pandemic. Overall, net revenues decreased slightly to about $85 billion in 2020, down from $91 billion in 2019. banks across the globe decreased the number of loans being originated, and Bank of America more than doubled the cash on hand to prepare for trouble. So, lower consumer spending combined with low interest rates cause revenues and profits to decrease. Take a look at part of the bank's balance sheet. Notice how the cash increased, loans decreased, and total deposits skyrocketed to almost $1.8 trillion. That's trillion with a T. Overall, total liabilities total just over $2.5 trillion. No, it's okay. I know it sounds like a lot, but considering the deposits are over 70% of that, it's not that bad. Runs on the bank are highly unlikely, so people won't be demanding all of their money at one time. Bank of America actually has less leverage than most other banks, and they're pretty conservative with reserves and risk exposure. That's probably one reason why Buffett likes the stock so much. Due to decreasing interest rates, Bank of America's net interest yield decreased to about 1.9% in 2020 and could stay lower in the future due to low interest rate targets from the Federal Reserve. Apart from the numbers, Buffett heavily considers an investment's economic moat and management team. Bank of America is the 8th largest bank in the entire world, and therefore operates an efficient scale moat. Bank of America is given ample investment opportunities that smaller banks just don't have. They can keep costs low compared to their total assets since they deal with so much money. Another thing is that Bank of America is so large and so heavily involved with consumer banking that it is virtually too big to fail. In the extremely remote event of another financial crisis in our lifetimes, Bank of America will certainly receive a taxpayer bailout regardless of whether you agree with it or not. Additionally, since Berkshire Hathaway is such a large shareholder, in hard times, the bank can sell Berkshire convertible debt as they did in 2011, and Buffett will buy everything he can get his hands on. Another moat Bank of America has is its branding moat. The Bank of America brand has been around since 1998 and has more customer accounts than any other U.S. bank. Customers rarely take out all of their money and leave the bank. In fact, they usually just use the bank they're at for their personal finances like mortgages, auto loans, and credit cards. Therefore, the large customer base is one way Bank of America fends off competition from other new entrants to the financial sector. Now, I'm not saying brick-and-mortar banks are the future. In fact, I'd bet that fintech companies will take over most of the banking sector eventually. But for at least the next decade, Bank of America has a group of loyal legacy customers that will almost certainly not leave the bank. Bank of America's CEO and chairman of the board is Brian Moynihan. Moynihan joined Bank of America in 2004 after an acquisition and became CEO in 2010. The CEO before him made some of the worst acquisitions in the history of finance, and Moynihan stepped in to mend the bank back together. With the extensive help of the federal government, he has proved that he can build back a struggling company. Buffett sees him as a trustworthy individual. I don't know him, so I can't comment, but his statements and discussions with analysts seem to prove that he is transparent. The executive team is heavily compensated in long-term stock awards, with the CEO making a $1.5 million base salary and over $23 million in stock options. Other executives are also compensated in stock awards, but close to half of their compensation is from yearly bonuses. It's no secret that Bank of America's employees and other finance employees are heavily compensated, especially in stock awards. But I wouldn't say that makes them prone to make decisions for the long-term goals of the company. As the economy rebounds from some of the effects of the pandemic, it's reasonable to assume that Bank of America's revenues will increase in the next 5 years, and it's highly likely that they will at least remain constant or slightly increase for the rest of the decade. Even though we just don't know how long interest rates will stay this low, Bank of America's customer deposits have significantly increased due to stimulus payments. This will probably cover any decreases in revenue from lower interest yields, as there will be a higher volume of loans. I think it's unlikely that Bank of America will grow customer accounts much more than they already have, since they've already dominated the American market and will probably not expand into any more global markets. Therefore, I have projected a revenue growth rate of 3.5% for the next 3 years, which is what the bank has also projected, 1.5% for the 3 years after that, and 1% for the last 4 years in this decade. Those rates are slightly lower than the expected US GDP growth. I've made it slightly lower since I really don't know what the Federal Reserve is going to do, and deposits could remain constant or decrease over the years as consumers move to more low-cost fintech banks. Alright, so after all that, let's figure out the bank's intrinsic value. So, 90% of Bank of America's revenues are from the US, and the rest are from mainly Western Europe and Asia. I've weighted the equity risk premiums for these regions, considered that the bank has a high credit rating, used 1.6% as the 10-year risk-free rate, and have come up with a discount rate of about 6%. I've used the financial statements over the years and created an adjusted operating margin average of about 30% of revenues. I expect that it will remain at this amount indefinitely. I've also used a reinvestment rate of 4.5% of revenues per year to cover property, equipment, and infrastructure costs. The tax rates are expected to be about 14% due to tax credits from the bank's significant investments in environmental projects. All things considered, we get an intrinsic value of about $58 per share, which is higher than the current stock price of $39. At current prices, I'd say the market is pricing in about a 9% return over the long term from stock buybacks and dividend payments from expected free cash flows. 9% is alright, I guess, but for my estimates, it's no wonder why Buffett was buying all the stock he could when it was at about $24 per share. At this price, the stock was expected to yield about 13%, which is extremely hard to achieve for a company like Berkshire Hathaway, and is above Buffett's 10% investment return target. But for retail investors like us, we have to consider that there are over 1,000 different ways the bank could overperform or underperform this model. The bank's success really comes down to the macroeconomy as a whole, which has a ton of moving parts. So, don't take those risks lightly. But if you do want to invest in Bank of America, it definitely doesn't hurt to have Buffett on the same side of the table. I hope this helps. Please leave a like and subscribe if you enjoyed. What do you think about Buffett's second largest investment? Let me know in the comments, and I'll see you again next time.